What's going on, everyone? Good morning, good morning, good morning. Good morning, good morning, good morning. How are we doing? Market pretty much is doing the same old song and dance that we've been in for better half of a few weeks here, where market kind of grinds higher in the overnight session, and then New York opens and we just slam it, right? I don't really think the bulls are by any stretch of the means out of the woods yet. They've got a ton of work to do, and the market just seems super uncertain. Very, very uncertain. What I would like to see going forward, at least for the month of March, is to see a little bit of a relief bounce, right? Maybe we get some of these concerns addressed that the market may have. There's some clarity, and we can get a little bit of a bounce, but we're in a very tough spot right now, macro wise, because we're at a weekly level of support. And if that weekly level of support cannot hold, we could be looking at a multi-week or even multi-month sell cycle. Which is never really good, because markets are a lot more volatile. Volatility is great when you're on the right side of the move. When you're not on the right side of the move, it tends to become a little tricky. What I am looking at is a 1-hour chart for the NASDAQ. Looking at the Bollinger Band start to compress down a little bit. So anytime the Bollinger Bands start to really compress down a little bit, could be signaling, right? Could be an indicator that you are getting a move one side over the other, right? What good does it really do you if we don't really know what side we're going to break out to? Well, it can align with a lot of your strategies. Like, let's say, for example, we're breaking down through the bottom Bollinger Band and you have a beautiful short setup. It might give you some confluence to take that trade with a little bit more confidence. Same thing for the upside. One thing that I'm really kind of looking at is, if you look at Friday's lows, this whole area down here, if I was to draw, let's say, flag pattern, right? Is this the start of a potential bounce, right? Or are we going to break through and act as resistance, right? Again, the market is extremely weak, so if I was to bet money on it, I would bet that we play around in this area, but kind of never really close over these highs before we at least test the bottom of the range. And when we get down to the bottom of the range, which is going to be Friday's lows, that's where you're going to want to see, can the bulls hold that to potentially move higher? If not, we will get thrown into a multi-week sell cycle, which we've already kind of been in, right? It's going to be very easy to kind of look now in hindsight and see that, hey, let's look at the daily chart, right? it will be very easy to see looking back. Just give me 1 second. You know, if we do continue to sell off, it'll be very easy to kind of look back and say, well, you know, going into the new year, going into President Trump taking office, we kind of had this final run up into 22,450 way up here. Okay. And then we had a little bit of a back test followed by a lot of consolidation, and we attempted to try to push higher, right? So what it's going to look like is, in hindsight, because again, remember, everything in hindsight always looks picture perfect, but now that we've got the data, we can kind of actually see that just before the first of the year, before President Trump has taken office, you know, markets were very excited. We kind of have that announcement of the winner of the new presidency, and we put in this nice run up, and then we kind of just, you know, we do nothing. So we're going to say that this is the high, and you're going to say that this is going to be a lower high, obviously, right? So you've definitely got a downwards trend line. Now we've broken through the bottom, and this bottom is going all the way back to January the 13th. This is the wick that I'm looking for, and you can actually stretch it all the way back to November. If we actually look back at November, we had a, you know, very nasty 600-point red day here that kind of takes us into the 50 EMA, 50 SMA before we started that rally, and we've lost that area. So this whole area here, which, depending on where you want to look at the chart from a daily perspective, but if you were to look at the sell-off from the highs and mark this out as a shoulder, a head, and a shoulder, we did not get the neckline break, and the neckline break would have been new highs. Okay, and in fact what we did was we actually just kind of came up into the range and got rejected very aggressively. So what it's going to look like is that this was the start of a multi-week, multi-month downwards action, right? And if that's the case, of course it's going to be very easy to see now, but what you should do on a day in and day out basis is basically you want to track the macro chart, right? Which is a daily, weekly view. You want to track your daily candles, you want to track your weekly candles, just to kind of see where you're at in the current cycle. And right now where we're at in the current cycle is not a good spot. You know, we're basically all the way back down to the bottom of the range, going all the way back to November, December of 2024. And we're at a key area of support here, which I believe was the 150-day moving average right here. This like lighter shaded blue line. We're at the 150-day moving average where we got that aggressive kind of bounce on Friday. Okay. Now today we kind of blew that top off from Friday, and now we're kind of, you know, backpedaling a little bit. And again, a lot of that long-sided work was done in the pre-market. A lot of that, you know, buying action was done in the London session. And literally from the word go in New York session, we essentially kind of, you know, spiked up a little bit and then sold off. So if you're wondering, you know, well, if the market was ready for a bounce, why would we sell off? Well, the reason why we sell off so aggressively, or why you get even those little intraday bounces that are 20, 30, 40 points in a minute, is because the volatility in a sell-sided market is sky high. And anytime it's sky high, that volatility is going to produce some massive ranges, and it's going to produce some very violent price action, whether it be a bounce or whether it be continuation of selling. And the reason why we kind of stopped this morning is, if you look right here at around 21,126, we've got an area of resistance here at a 100-day EMA. Okay, we tagged it to the T, and we kind of fell back down. So right now, the area that the bulls need to reclaim before I am even considering giving them any sort of benefit of the doubt is they've got to at least get back over this linear regression channel at around 21,050. Okay, and even from there, I'm still not super confident, but at least it kind of continues the narrative of maybe we get 2, 3, 4 days worth of a dead cat bounce where we can play something to the long side without having to feel like we're looking over our shoulders every 2 seconds to see if they're going to pull the market, right? And truthfully speaking, we would need to close on a daily time frame over our 5-day moving average. And here's the rule of thumb, and this is the way that I was taught, and this is the way that, you know, a lot of people and again, I hate to use this kind of reference, but this is the way that a lot of, you know, bigger money players will analyze charts on a intraday kind of perspective. If you're trading below your 5 and 10-day moving average, the price action's bearish. Okay, it's very, very bearish. Does that mean that you can't get spurts where you bounce for an hour or two, and yes, you know, you're trading the NASDAQ and you jump in for a quick scalp, and you take 5, 10, 15, 20 points? Of course, you know, you're always going to have those opportunities just due to the fact that the range on the NASDAQ is so big. But from a longer term perspective, again, we always want to be on the right side of the longer term perspective. Okay. If you're trading below your 5 and 10-day moving average, the price action's bearish, you should typically be looking for the shorts. Okay. That's just a rule of thumb. And until we close over the 5 and 10-day moving average, it's pretty safe to say that a lot of your bigger moves, a lot of your more violent moves will be to the downside. Okay. Now, this selling pressure, you know, this sell cycle that we're currently in, we're on a 1, 2, 3, 4, 5, 6, 7-day sell cycle where the range has expanded. Okay. And I'll just give you a reference. If you go back to February the 21st, when we lost our 50-day moving average, which is very significant. I don't care if you're a hyper scalper on a 10-second chart and you don't care nothing about macros. It needs to be, you know, you need to start caring about them because it's going to keep you on the right side of the trend. As soon as we've closed below this 50-day moving average, you can see the expansion in the range really, you know, open up. 592 points here, 400 points here, 460 points here, 800 points here, 500 points here, and today's our range is about 360 from top to bottom. Now, the reason why I make note of that is because look at what the price action looks like before you lose your 50-day moving average. A range of 200 points here, a range of 300 points here, a range of 350 here, and this is considered a pretty big day. Right? A range of 182, a range of 217, and a range of 181. So price action literally not only doubles, but even triples in the amount of range. Okay. So when you have a market that is trending below the 50-day moving average and your range intraday, regardless if you're trading a 30-second time frame, your range is also expanding. Which, if your stop losses are not expanding and your position size in the number of contracts is not shrinking, you're running the risk of getting stopped out more. Sure, you're also running the favor of, if you're in on a move, you can definitely capitalize on more points. For example, when you're in a smaller range between 180 and 300 points, like you are here when you're trading above the 50-day moving average, like even here and even here, and all of this run up back here, those 10, 15, 20 point moves, they're kind of slow. They're slow moving. You might be in it for 2, 3, 4, 5 candles, 20, 30, 40 minutes, 10 minutes. But when you're in a range and a cycle like this, you know, you can be looking at a 30 to 40 point 1 minute candle. This morning off the open, there was 25 to 35.1 minute candles. And if you're in on the right side of those 25 to 35, 40.1 minute candles, 2 minute candles, you can capitalize on that. But here's the kicker. The kicker is, it doesn't mean that you want to kind of sit around and just say, hey, you know, I can just do this all day. I'm going to be rich. Because you can just as well be on the wrong side of those 30 to 40 point candles as well. And that's not going to feel as good. So although it feels great and it's always a good thing when we're able to be on the right side of those moves, but because of the volatility being so high, and obviously with trading being a probabilities based business, you're going to always run into that losing probability trade, regardless if the setup is picture perfect or not. It's just the way that it is. So if you are lucky enough, off the open, off the first hour or so, and you catch, a 20-30 point winner, you make $300, $400, $500, it's probably in your best interest to kind of lock it up. And again, depending on your size, for someone's amazing $200 winner could be someone's amazing $1,000 winner. It's all relative to the amount of contracts that you're playing, but you definitely do want to make sure that you're not over trading when you're in an environment and a cycle that we're in right now. Okay, not until things either turn around, not until we turn around and you can definitively see that, hey, the market's back on track, everything's back to normal. Because just because we've rolled into a new month from February to March, and we're kind of expecting, okay, let's put March behind us. That was a little bit of a tougher month to trade. I know for myself, again, I can be completely honest, the month of February was a lot more tough to trade than the months of, November, December. But why were they, and even January, why was it a little bit tougher to trade? Well, if you kind of look at the price action, right? If you look at the price action for the month of February, you get a lot of big moves up, and then the next day just pushes down. You get 2 days where you look like you're just going to break out and kind of test the highs, and then you get a 350 point down day to the bottom of the range. Then you push back up the next day, and then it comes back down. And then you get towards that later middle half of the month, and it's just like sell, 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 sell. Now, what does that mean? Well, when you're looking at days like this, right, towards the beginning of the month, let's say intraday we pull back, okay, and you find an area of support. Well, you can bounce that and probably make some cash, right? And a day like this where, you kind of pull back off the open, and then it finds support, and then you can just ride it back long. Well, guess what happens when the market stops doing that, right? On a day like this, market pulls back, you think, okay, great, we've got resistance here, we're just going to pull back into support, and we'll be able to bounce this back up. Great. Nope, just keep selling. Okay. And then let's say, on a day like this where it's like, okay, let's go short, you make a little bit of money short here, and you come into this big level of daily support, like a 50-day moving average, and you're like, great, next day opens up, we're holding support, you get in long, and then it sells off again. So you go short. Okay, and it's just a lot of back and forth movement versus like if you kind of look at what was happening in the months of November and December, essentially it's just get long over previous day high, right? You break out, get long. You got a 2, 3, 4, 5, 6 day buy cycle where it's just long, 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 long. And then you allow it to pull back. Guess what? Take out the new high, long, long, long. Now we kind of, put in this high. We kind of close this gap. So that's an easy short position there. You make some good money. And then you kind of just ride the support back again. As long as we're over this 20-day moving average support, there's going to be perfect buying opportunities here to, short a previous day's low through pre-market and then kind of get back long, right? So the market has definitely changed in the last month. Okay. It's definitely changed in the last month. So it's made things a little bit harder. And not only has it made things harder from, a conditional standpoint, but it's made things a lot harder because the range is also expanded. And that makes things hard to manage. It makes stop losses hard to manage. It makes, take profits. It makes you feel like you want to get back in because it's like, oh, you just took 10 points, but you watched your same setup move for 30 or 40 or 50 points. So where do I think that this market is going in this, current environment and current cycle? I would be a fool to think that we don't come down and test a 200-day moving average. I'd be a fool to think that, regardless if we do want to bounce, for another day, maybe even 2 days, kind of get back into this range. I would be a fool to think that we don't at least tag it, if not sweep that area. And the only thing that would put me off of that narrative of coming down here and testing this 200-day moving average is for this market to close back over its 50-day moving average, back test it and hold. Okay. Now, if we can do that, it's back to risk on. Okay, because now essentially the market has successfully had a nice pullback. We've bounced, we've reclaimed our 50-day moving average, and it looks like we're going to continue our path of trading upwards, right? And again, just remember, there's a lot of uncertainty in the markets. It's every day that there's some type of headline going on. The issues with the tariffs is just, for however long this is going to last, is going to definitely put some strain on the overall markets. The issues with Zelensky and Ukraine and Russia are definitely going to put some strain on the market, especially when there's a new comment, new headline almost literally every other day, right? So we really need to kind of get past that, and the market needs to kind of relax a little bit, and then we need to see what we have some digestion off of that. And it's like right now the market can't really digest itself enough to figure out if we want to pull back or continue to go higher. But I've kind of been calling it for a few weeks here where I'm looking at the market and I'm like, okay, we're constantly putting in these lower highs. The market is just not, it just has no reason to go higher, and it has no strength to go higher. And those pullbacks were coming more frequent and they were becoming more violent. The market internals were exceptionally weak. And the thing that's worrying me about this market is that if you look at this weekly chart, although we're only on a 2-week pullback, and this is still in very, very bullish context, there's still potentially room to pull back more. And it's to pull back into around 20,000, which is going to be another 800 points down. And that's kind of what's lingering over my head for the foreseeable future, is that our weekly chart is literally in the middle of no man's land. We have no support until our 50-day moving average on a weekly chart. We are well below the 20-day moving average, well below our 5-day moving average, 10-day moving average. So this is kind of leading me to believe that this market is on a path to 20,000. Because if you kind of look at in the past, over the past year, going all the way back into, essentially around Q1 of 2024, anytime we've kind of lost a 20-day moving average and we've lost this upwards channel on the NASDAQ, we've come pretty close to this 50-day moving average. This time here, we kind of did stop right in the middle back in April, May. But if you notice this time here, we lost this channel. We went on a 2-week sell cycle before we recovered. We went on a 2-week sell cycle before we recovered. Now we're currently on a 1, and this is our 2-week sell cycle below this channel. So what this is telling me, because history always tends to repeat itself, is we still could be on a week sell cycle here, which is going to bring us to about 4 to 5 weeks of this pullback that we've been on since 22,450. Now, everything would change, okay? Everything would change, and this would become a completely risk-off environment if this market does lose 20,000. If this market loses 20,000, we are potentially, and I'll zoom out here, we are potentially losing an uptrend that started all the way back in 2023. Okay, so this uptrend has held this 50-day moving average on a weekly for the better half of a year plus, right? Almost 2 years. All of 2023, all of 2024, so 2 years, right? And if you kind of look at where we're at in the overall cycle, for stocks, a little bit different. About every 2 years, you kind of get that sell cycle. When was our last bear market? Depending on when you came into these markets, started to trade them, the last bear market was in 2022. So for 2022, it was literally the month of February when we had all the frenzy on SPACs, all the frenzy on growth stocks, all the frenzy on tech, and everything seemed to pump, right? Coming off of late 2020, 2021, everything pumped for a year, and then February of 2022 hit, and things literally did not come back for a year. And some of those names have never come back, right? And why is this important? Well, if you kind of look at, we had a 1 year sort of bear market in 2022, and then we started to kind of come out here. You can see this is a start of 2023, and you can see this is 2022 here, where we're still kind of pushing down, and then we kind of just stopped here, right? We just kind of stopped, and you can see in February of 2023 we started to kind of recover a little bit, and then we just went on this 2-year bull run. Now, if the market is going to continue, then this is a healthy correction. This is a healthy correction that we need to probably see 20,000, 19,000, even 19,000, evens 19,200. That would be a healthy pullback, and that would be a pullback into this kind of range here, and it'd look like this, right? Before you kind of see it do something like that. Right now, that would be a healthy correction for a continuation this year of a bull run. But if that narrative changes, if that narrative changes where we kind of come back down here, we test, and then we bounce, and then we kind of lose that area, and we come down into those 19, 20,000s, right? And then that next bounce, when everyone thinks that's it, that's the end of the road, it gets rejected. Then you would be looking at bigger areas of correction, which could entail starting a multi-month sell cycle. Now, that's definitely not what I want to see. Even if we are traders where we can make money on a short-term basis going short and long, it's just not what I want to see. It's not what I want to see for the economy. It's not what I want to see for people's 401ks, IRAs, long-term portfolios. It's not what I want to see for the overall sentiment of the market. And it's definitely not something I want to see, because it would be signaling to us that there's something larger, which I think we all kind of know is kind of just been lingering like a black cloud over us for a while in the world as a whole. That something bigger and darker is happening, right? Where you could maybe get into that 1-2 year recession, which I don't think we want to see. Prices are already so sky high. You know, people have already had a tough time as it is since 2020, and kind of getting back on their feet and getting things what seemingly back to normal over the past 3 to 4 years. We don't want to be thrown back into that, right? So I would prefer that, yes, we have a healthy correction, and then we kind of just continue this path. But you also have to understand that although markets do seemingly go up and to the right since the history and evolution of the stock market, there is periods of time where it gets very dark. And that's not to scare anyone, but it's to prepare you. It's to prepare you. Even as a day trader, when you do come into these markets, you have to always be prepared for both sides of the trade. You have to always be prepared for a continuous sell cycle. I mean, for the last 2 weeks of February, literally, you could have waited for the NASDAQ to put in a high and then short. Right off the open, put in that high and then get short. Put in that high over London session high or test London session high and then go short for the last 2 weeks. That's the cycle you're in. So you need to, instead of off the open when the market starts to pump, instead of saying, oh, okay, great, we're going to go higher. No, you have to let off of that, because you already know what's going to happen. You've seen it already for the past week. You've seen it for 2 weeks. And the problem that a lot of traders have is they tend to not trust themselves. Us as traders, we tend to not trust ourselves as much as, let's say, a long-term investor. A long-term investor knows what they're supposed to do. It's periods like this when you're pulling back, and periods like this where you're testing weekly and daily macro areas of support, where it's where you're dollar cost averaging in, you're loading up and you're buying more, and you're kind of waiting for those better days. Whether we're down here for another week, whether we're down here for another year, you know that over the course of 2, 3, 4, 5 years, that you're going to be, yes, right on your position, assuming that you're holding a decent, strong name and you're not gambling or speculating on something that is fresh. or unproven yet, that it will come back, right? And those are the dark times where you make a lot of your money, because you're doing a lot of the needed and necessary work that when most people are fearful in staying out of the markets until better days, or out of dry powder, meaning they don't have any more money, you are aggressively buying. Okay, and it never hurts to continue to buy. It never feels good when you're buying, when the market just keeps going lower and lower and lower, but it always does pay off. Okay, it's just look at the charts and go back to previous 50, 60, years. It's gone back. It's gone up. But for us as day traders, we come into the market where, hey, half the time our brain is fried and scrambled, and we're trying to go long and short in the same day, and we're going short, 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 long, 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 and we're just scatterbrained all over the place. Right? Because we are long and short and short and long, we tend to not trust the bigger macro cycles, because it's kind of hard for us to believe that, hey, we've been selling off, for 1 day, 2 days, 3 days, and it's like, shit, 2 weeks later, it's like, we can't go down anymore. We have to be going up now. Look at the market. The market just opened up and we've got a big green candle, so like, let's go long. And then it pulls back again, and it's like, wow, why did the market continue to do it? Why is it continuing to do this? It feels like it needs to go higher, right? It's because those traders, myself included, we tend to get lost in these small time frames where you don't really understand what's going on the bigger picture. And all we see is the great setup, 5 points here. And you can be thinking that here, and here's the argument that someone would say, well, regardless if the market is going down macroly, I could just get in and take 5 to 10 points long or short, and I don't need to really worry about what the market's doing. Well, true, if you have the discipline to walk away when you do hit that one trade. So like, let's say you get into the market and you have 1 or 2, 3 contracts, mini contracts. You bang out a great trade for 7, 12, 15 points. You make $400, $500, $600. Let me ask you the question, my friend. What is it that you do when you make that $300, $400, $500? Do you walk away? Because remember, as you said, it doesn't matter if the market's going up or down. I just need to make a little bit of money. Regardless, I don't really care what the market does outside of the 1 minute time frame that I'm watching, because I know that I can catch a move for 5 to 10 points. So if you catch that move for 5 to 10 points, it would probably be in your best interest to walk away, if you think you can do that every single day. But the problem in where people are going to get run down on a bigger macro cycle, if we do continue to sell off and this market doesn't recover in the month of March, I'm fully respecting a recovery in the month of March. And if we don't, that is going to signal to you that we are going to have following months to come where it is not buy-sided bias. That will be the areas where people will get chewed to pieces, because the same guy or the same girl that believes, I don't really care if the market is selling off, and I don't really care if we've lost, I don't really care what's going on outside of my 1 minute chart, is the same trader who is going short and they caught a beautiful trade, and then they think that they can do it again in the market, just out of nowhere wanted to reverse course on you 40, 50 points to back test an area of supply before it can continue to go down. Right? So if that's the case, that's where those type of traders who don't really care about what's going on, or do the homework to look at what's going on, where they tend to get shredded. And they tend to become restless in the market, and they tend to lose accounts and blow up accounts. And then they fall out of the markets. I've seen it happen for at least 2 cycles before. I've seen it happen in 2020. I've seen it happen in 2022. I've seen it, starting to see it happen here again a little bit more frequently. You get out of the markets, you go take a break, you come back. When the markets are red hot again, and you say, okay, and now is the best time to make money. And you come in at either the middle end of that cycle, and you kind of repeat yourself. And that's why the average retail trader never wins, because they don't truly understand how to play this game. If you want to be a trader, I'm not saying we need to know what's going to happen for the next 6 months, but we at least need to have a macro overview of what potentially could happen for the next day. And by looking at and just charting a 1 minute time frame or a 5 minute time frame for that day's price action is not enough. You need to at least pull up a daily time frame and look back 1 or 2 days and kind of see what is the market doing for the past 1 or 2 days. And if we confirm this level, is the market going higher or lower, right? So I can kind of do that for you guys right now, where I'm on a 1 hour chart and I can see the prior 2 days worth of price action. I can see that we were sell sided here and we kind of held, we kind of, quickly lost the London session lows, which obviously would have provided a fantastic opportunity. And then we had basically a 10 a.m. reversal here. And then we kind of came back down to the bottom of the range and then we pushed up. Okay, great. So I can see that I've got a low here, right? I've got a definitive low here at Friday's session low. Okay. So what is that telling me? Well, we can be on a continuation dead cat bounce. Obviously, I want to be short for when and if that ever happens. I want to be short below 20,460. Okay. I want to be short below there. So I'll be ready for that trade. I'll be looking for setups around that area. Okay. Now for today, if we were to confirm, which we wicked above it, if we were to confirm these London session highs, guess what? We've got room all the way up here to 21,263. Great. So what would I be waiting for here? I want to see us take out London session highs, and I want to see a following 1 hour candle confirm those London session highs. Great. I want to be long. Perfect. That's my long setup. Now you can see that we quickly spiked above London session highs, and there was no following 1 hour candle that confirmed it. Great. So I do not need to be long. That's what I'm telling myself. I do not need to be long. And again, if you're saying, well, I made money long today, I did actually really, really well. Well, congratulations, but you should probably lock it up because you were on the wrong side of the move. The better move for you was a short. And the better move on the short was through the London session lows. Whoops. Right? Those London session lows. Because that provided an opportunity from here at 20,888 all the way down to 824. This is over 60 points, and it did go down more, but I don't even need to do that. I mean, if you're looking for more than 50 points on a move, power to you. And you had a clear area for a take profit, and your clear area for a take profit was this declining 50-day moving average. Now, if you're kind of looking at the chart here, this is just setting up nothing more than a bear flag, right? So yeah, for those of you guys who are making money along here and here and here and here, great, congratulations. But I'm going to tell you that you're going against a trend, and I'm going to tell you it's probably in your best interest to walk away green. Because what I am saying is that it's not impossible to be against a macro trend and make money. It's definitely not impossible. But what I'm saying is you are playing with fire, because when you're under macro supply and you are going against a bigger trend, they can pull your long position at any time. It doesn't have to continue to go higher. It doesn't have to confirm and work out. They can pull it at any time. So if you are making money long in a sell-sided environment, my best advice, and this is just my opinion, is to probably walk away with that, instead of thinking you can just sit here and pick off trades. It's a huge problem that I see for retail traders. It's a huge problem that I see for traders who trade prop firms, is that you got essentially infinite leverage until you blow your account up, correct? That's not trading in the real world. It's definitely not trading with real live assets. It's definitely not how you would trade your personal account with real money. So instead of looking at it as an infinite money glitch where you could just sit there and take a bunch of trades, you've got to really start to define and refocus your strategy to where the rules are clear, right? Everyone comes into the day with, I'm going to respect my rules and I'm going to use this as a stop loss, and I'm going to, and in the moment it happens and you're not okay with it, you don't listen to your rules. So trading is nothing more than a game of survival. Each and every single day, it's just a game of survival. Can you survive today to make it into tomorrow? And the more days you can survive, the better you will do, the more consistent you will be, and the more money you will make, the more days you can survive, right? You have to look at it in that sense. It is not a situation, trading is not a situation where you learn a particular chart pattern and that's your infinite money glitch where I've understood this pattern and I'm going to make money forever. No, the market doesn't care about your pattern. The market doesn't care about, what the candlesticks look like and what your back testing has told you the next one does. Each individual trade is separate of the previous and future trade. Although patterns continue to repeat themselves, it's not an absolute. Okay? So yeah, although a lot of times our strategies will give us an edge where they tend to work out a little bit more than they don't, there's always that opportunity where the market doesn't work out. And if it doesn't, you've got to know how to handle that. And we can kind of eliminate some of those mistakes that we make as traders if we are just a little bit more patient. And we have to understand that this is not an infinite money glitch. Whether you're trading one prop firm account or 20 or 30 or 40, it doesn't mean that you should sit here and try to trade all day. And I never understood that. I never have understood people that want to trade all day long. What's the rush? And it's generally those people who are trading all day long that are the most inconsistent when it comes to profitability. Exactly, Jim. Every move is not your move, and all money is not your money. And the quicker you understand that as a trader, the better you'll do. Like for me personally, I don't see a thing going on here on the 1 minute time frame. I mean, on the 1 hour time frame, not a thing. Sure, is the market moving? Absolutely. Is the price going up and down? Absolutely. But do I see anything worth my while? No. We're a long ways away from that first opening hour range high where I have room to actually take a trade long, and we're a long ways away from actually losing this support here in the low of day. Not an area where I want to be trading at in the middle of the range, especially when you look at the middle of the range and you see that you've got resistance here, I've got resistance here, and I've got resistance here. Now, does price action have to respect this resistance? Does it have to respect it? No. Can it just shoot up past it? Absolutely. Can you look back in hindsight and say, wow, I should have been long here because the market just went higher? Sure. But you have no idea that it's going to do that. Now, if this is resistance, well, can't I get short? Sure, absolutely you can get short. What are you going to use as a stop loss? Stop loss is going to have to be here, right? It's going to have to be there. So if you can afford to give up that much points, sure, you can sit here and take profits on the way down into support. Hold the runner to see if we can continue down. Sure. But do you see how it's a 50-50? It might go up, it might go down. And that's the problem that a lot of traders have, is they want definitive answers. They want a definitive, well, if I get short here, can I make sure that it goes down? No, you can't, sir. I'm sorry, but you can't. Well, how about if I if I bounce it from here and I have a tight stop loss and it rides up, you know, is it going to test that supply? I have no idea, my friend. You can definitely put on that trade ID and find out. So I guess the point is, it's going to really, it really boils down to is what are you comfortable with? What makes sense to you? To me, nothing makes sense right now in this range. Nothing makes sense. I don't want to be long or short. So I will continue to hang out and just wait. Remember, when you look at your screen and you see the price going up and down and up and up and up, it doesn't mean that there's a specific area where you should be making money at every single tick. Because it's got to make sense to you. And it's got to align with your strategy. Right? And again, what is the number one problem for anyone listening? What is the number one problem that we face as traders? Don't everyone answer at the same time. Managing emotions. What would come with managing emotions? If you're not managing emotions, you're doing what? And obviously it's not managing emotions, but if you're not managing your emotions, what are you doing actively or physically on the charts? Overtrading. It's number one problem in trading is overtrading. Net positive, and you think that you understand what the price is doing, but you're not understanding fully that you're in a losing probabilities game, where the more trades you take, the more opportunity you're opening yourself up to lose. So you give back profits. You lose, but because this is not just a losing probabilities game, it's also a win probabilities game. You take more trades hoping to get it back, but it necessarily doesn't have to work out that way. So the right course of action would probably be to stop trading when you are at a small loss, or taking, one or two or three losses on the day. Again, depending on your stop loss and depending on your max pain per trade. Obviously if you're losing $50 a trade, you can afford to take 3 or 4 trades. You can afford to take 2 or 3 trades. If you're risking $500 to $1,000 a trade, maybe that one trade idea that you're putting on is your one trade idea for the day. You always can come back tomorrow, because again, I've said it before, unless you guys know something that I don't, I didn't get the memo that the market's not open tomorrow, or the market won't be here next month. Because the last I checked, I've been sitting here for 13 years and the market has opened up every day. And it continues to do the same thing. It goes up or it goes down. So there's always an opportunity where I'm going to get another chance to make my money back. I'm going to get a chance to continue to grow my account. What typically doesn't work out well for me is when I lose money and I can't handle those emotions short term, and I want to overtrade and I want to take another trade to either get it back or make more money on a specific day. And then I end up just losing more, and I just go on tilt and either lose the account. If you're talking crypto, probably the stronger names, something inside the Big 10. So I would go to Coin Market Cap and look at your Big 10. The top 10 are probably going to be a little bit more safer than your coins outside, you know, the top 50, 100. Obviously, there's more potential. There's a bigger potential reward the deeper down the line you get, because the R multiples, meaning how much you can make on them, is much more significant, but they're a lot more risky. And again, for trading crypto, it's probably never the best thing to, if you're new to the crypto markets, to start trading crypto. The better thing to do would be to find names that you like and believe in, and dollar cost average and hold crypto. Build a basket of names and take profits when we're in bull cycles and average down, and add to your positions when you're in bear cycles. The more glamorous thing to do is short-term trade for anyone, because the instant gratification, even for us here trading the NASDAQ, trading futures, trading stocks, trading options, there's instant gratification, and then I can click a button here and make hundreds and hundreds of dollars in essentially minutes. And if I do that every day, I can be rich. But it's extremely hard to do on a day in and day out basis without a lot of experience and a lot of capital and a lot of patience. Because this is again, whether you're trading futures, you're trading stocks, you're trading crypto, trading is not easy to do. If it was, every single one of us would be multi-millionaires. It's not easy to do. Your best traders with the best strategies, you know, I've seen this comment a lot in my journey, I guess we could say, on people's videos or live streams, or I've even heard it a couple times. Well, if your strategy works this well, or you know how to trade, how come you don't just do this? How come you don't just do that? How come you don't trade more size? How come you're not a millionaire? How come you're not a billionaire? Well, the thing is that there's levels to this. There's levels to this. Just because you know how to trade, and just because you use and trade a strategy that, let's say, yes, it does have an edge, 60%, 65, 70%, 55%, even 30% with a very, very positive risk to reward ratio. Just because you can have that strategy doesn't mean that every trade you take is going to win. And it doesn't mean that every day you're going to follow that strategy. And it doesn't mean that every day you're going to manage your emotions. And it doesn't mean that those setups are perfect every trade you take. That's why, even though there is instant gratification in trading, because you can make money really, really fast, there's still a level of management that needs to go in there. And it is a time thing. It does take time to build your account up. Now, sure, if you have $1 million account and we're risking $100,000 a trade to make $20, $30, $40,000 a trade, then yes, you can come in there and you can throw around big size, make big money, and essentially be very, very rich. But most of us do not have $1 million, $2 million, $5 million, $10 million in a trading account to be able to manage that. And even for the people who are trading these prop firms, and let's say you got 20 accounts and you've got $2 million under management, which is complete bullshit, you've really only got about $50,000 to $100,000 in drawdown that you're able to work with. So it's still not that easy to do. I mean, think about it. A 10% day, which is a very, very good day, 20% day on $100,000 drawdown, if you have 20 accounts with, you know, whatever size account you have, is a $10,000 to $20,000 day. But can you do that every day? The odds are probably not. Slim to none. So for a lot of people, they really need to get it. They really need to get the understanding down and do the math and see like what is even realistic, right? Like, you're not going to make $10,000 a day. Like, even if you have 10 accounts and you make $1,000 a day, which seems easy, you're not going to do it every day. You're just not going to. But what is a number that is a lot more realistic where that number can be hit? $1,000 a day over 10 accounts, making $100 an account is a lot easier to do than trying to make $1,000 an account. We only need to get 5 points out of the NASDAQ across 10 accounts to make $1,000 a day. To me, that's more realistic than trying to make 25, 35 points across 10 accounts every single day. So what does that do? That slows down the time that it's going to take for you to make $10,000. You know? Especially with prop firms, there's time limits, there's profit targets that you need to hit, you know. Because it's very easy to want to go out there and make hundreds of dollars a day times 20 accounts, 10 accounts. But the idea is very also a lot simpler in your head than it is to do in real time. Because we're very impatient people. We're a very impatient species. We want things to happen right away. And if they don't, it's World War III. Why is it not happening right away? Why can't I do what everyone else is doing today? Five-minute chart's still very, very messy. We are putting in higher lows. However, we've got a ton of resistance ranging between 20,960 to 20,990. So this 30-point range here can be extremely choppy. Or it goes up and then back down and up and back down and up and back down. And it could look like it's going up higher. But each pullback, I'm telling you, is going to hit a stop loss. If you're trying to manage something correctly, it's going to hit a stop loss. You know, what I would like to see better is to close outside of this range, back test it, and then confirm it. That will give me a little bit of a better idea to go long. Or I want to see us close below this range here, back test this, and then confirm. That would be better. 2 trade ideas. So what does that mean you have to do in the meantime? You have to sit on your ass. That's what it means. Sit on your ass and don't do anything. Unless you're on a super small time frame where you are going to scalp long here and scalp short here and scalp long here and scalp short here. It's just I've realized that I don't have much success doing that. Because I'm guessing. You know, like, does that make sense? Like, if I'm long here, I'm guessing that we're going to break through that. I'm guessing. And then if I get long and it pulls back 20 points and I'm stopped out, and then an hour later it's trading up here, it's like I was wrong. I was right on the position. Why didn't I just hold it, right? You know, I could tell myself, well, we're going to get rejected here. I can go short, and then it comes down a little bit, and then it goes back up and it gets stopped out, and then an hour later it's down here, right? So always double second entries on everything. You know, you want to see it break your level and then confirm. That's a second entry. You want to see it break your level and then confirm. That's a second entry. Second entries on anything. This looks like crap. There's nothing here. If you make money in this range, congratulations. You are a much better trader than I am. And that's okay. I am not looking to be the world's best trader. This is a trade idea that I would be interested in at the top of the hour. Would be if we can stay in this range up here, and then we have a new hour candle that confirms this hour's low. So, meaning I don't want to see any new low for this hour. I'd like it to stay above this hour's low, which is going to be a price of 20,900. And I'd like to see the following hour candle lose 900. I would be interested in that short position. Why? Because I've got room right down here. From here. That's enough for me to get in and make some cash. So I don't care what it does for the next 30 minutes. I just want it to stay over 900.
Booking.com has stays for absolutely anyone.
How was everyone's weekend, by the way? Everyone, you guys enjoy yourself? Relax a little bit? What did you guys do? Nice, Jim. Nice. Joe Coy is funny. Hey Jim, how's the weather right now in Arizona? I'm gonna be out there next month. Next month it's gonna be heating up already, right? Yeah, Joe Coy puts on a great show. I haven't seen him in person, just his Netflix specials. Argentina. '80s, that's not too bad. When does it start hitting 100? Or just stays like that? Don't you guys stay at 100 about 9 months out of the year? Yeah, gotcha. Guys, we're kind of pushing down into these 900s here. On our 1 hour chart, that's flirting with our 50 EMA. Anything below 900s coming out of the top of the hour, I would be interested in a short position. If you are short now, I would be taking profits because we are still in a range. And this can easily just snap back up to the top of the range. 120 in August. Wow. That's brutal. Here we are coming right into those 100s. Or 900s, excuse me. Again, if I was short, I would be taking profits here. If you had a setup, like for example, there was a flag pattern here, right? So if you are in that flag pattern, you are in a 1 minute 20 SMA, I would be taking profits there. I would have been taking profits there. That's the thing. People say that they get used to it though, right? They get like, they say that. I don't know if they're just saying that. They say, oh, you get used to it after a while. You don't even notice. How true that is, I have no idea. I've been to Arizona many times when it is 100, but it's like for a weekend. It's, you know, at least I can get out of there. I don't know about waking up every day and it's just 100 degrees when I wake up and it's like 100 degrees when I go to sleep. How that would be. I spent some extended time in Vegas, and you know, those $100 days, but again, you're inside most of the time. Everything is air conditioned. You don't really feel it until you're going outside, and if you are, you know, maybe get out by the water or something. But again, Nashville's got a little bit of that. I love Nashville though. I love Nashville, but again, never lived there, only visited. But Nashville a little bit more different style of heat though. Necessarily not that dry heat. That's the thing I've asked people before. Would you rather deal with the dry heat or a little bit of more of that humidity? Right? Like I remember when I was down in Austin visiting in Texas. I mean, that's humid. Like, I think at that point I would rather deal with the dry heat than the humidity. But that's just me. But I've heard complete opposites. People love the humidity over the dry heat. You see what I mean, guys? How we kind of push down almost into those 900s and then it snaps back. So imagine if you're the person, you're the guy or girl who's like, okay, yeah, we're starting to break down here, and you're just holding, and then you get stopped out, or you're back at break even, right? So always want to take profits into previous areas of demand. Yeah, definitely pairing the 20 SMA with the 50 helps. I'd also add the 200. That'll give you some areas where, you know, you could potentially take some profits into. It'll definitely keep you out of some positions. You know, if, let's say you have a 20 SMA setup and you have a 200 or a 50 that's like 8 points below, right? I'm not really going to want to take that setup because I don't really want to go short into an area of double demand. I'll wait for both of them to get broken and then wait for a confirmation. It gives you good areas where you can definitely take profits. Nice little bounce there. 1 minute 20 SMA kind of played out, but again, that's for quick action traders. You know, bigger time frame, we're still trapped, right? We're still trapped. We need to get over, this market would need to close over 20,989. 20,990s. I need to see it get over 990s to say that we've got a potential gap that we can fill into 21,033, which gives us, you know, 20 to 30 point potential to push into next supply. Other than that, you know, you could be looking at pullbacks in this area. You got resistance at 970, you have resistance at the 995s. Very tight range we've been in for the better half of an hour here. We're in about a 50 point range, 50 to 60 point range between this high and this 900 here. So not the easiest to trade. Pushing right back down into 900s here. I'd like to see it stay above 900, to be honest, until we can get into a fresh hour candle. Don't know if it's gonna stay up there, but it can break it, which would be fine. I'll still be looking for the confirmation through 900, but I would like it to not, you know, take out. If I have potential to 834, I don't want to see it drop 50 points. Then it erases my trade. Again, 20 SMA 1 minute. If you're in on that play and you're thinking quick action scalp, I mean, you should be out here and now. In and out. In and out. There's those 900s being tested and broken. 20,898 and a half is where we came down to. We still got 15 minutes left on this hour candle, so I'm still going to be patient here. I'm in no rush to take any trades at all, to be honest. I'm well into the green today, so I am just playing with profits here at this point in time. So I want to really make sure I love the setup. I could have easily, you know, if I was trying to build my balance up, I would have tried to take this scalp long, try to take this scalp short. But I'm not trying to give away anything. I want my trade ID and I want that only. There's the breakdown through 900s here, so this could definitely start to fly here if anyone was in on that move. 898 down to 881. Good move.
Hello again. From the
I'd like to see a back test into 900s and then confirm. Ten minutes here on this new hour candle. Patience, patience, patience. One big bear flag here on a 5-minute time frame, guys. 5-minute 20 SMA as well. I might jump this one. Testing and breaking here now. I'm just giving it a little bit more. Really wanted it to happen on the top of the hour candle, but might be getting ready to go a little early here. Yeah, we're in on this here, guys. We're in on this here. 6 points, 7 points, 8 points, 9 points, 7 points, 8 points. Back to 4, 5. It's gonna bounce a little bit and retest this trend line here. Could have taken the easy 8. I got around 7, 6 points here. It's gonna backtest this trend line here. Kind of looking for something a little bit more than 10 points here. See if I can get one more final wash here. 8 points, 7 points. I want to see one more kick down below 10 points. There's 10 points there, 11 points. I'm going to take that 10 points in a tick. That's a $200 winner there on one mini contract. I was waiting for the top of the hour to kind of see that confirm, but hey, you know, zoomed into the 5-minute time frame here. I got definitive 3 touch point flag pattern here with a breakthrough. Now, I waited for this candle to visibly get through my trend line and then fired away. I would have been comfortable holding this position all the way back into a back test of that trend line. And if we closed over, it probably would have exited the position. That was going to be the thought process there. But I wanted to see at least 10 points on the move, which I got. Could have taken a little bit more off of it here as we're starting to really wash out a little bit. If anyone did take this 5-minute 20 play, if anyone took this flag pattern breakdown, you know, take your profits. Take your profits. You know, you're running into a previous swing low here from 840 PST. You got that low sitting at around 20,831. So definitely want to take your profits into the low 30s here. You don't want it to snap back on you 15, 20 points and give away all your gains. Definitely could see how someone is up over 10 to 15 points on this move here. So I would be very, very cautious and protective of your money, right? You waited, you took some, you waited for a trade, you took a trade, and you've made some money on it. I would not want to give it back. Especially with a new hour candle getting ready to print in about 2.5 minutes here. The worst thing that you could probably do would be to not take profits on this push down and watch it kind of spring back up 20 points, 30 points. Okay, so if you're holding and you're still holding, kind of just manually move that stop loss down, manually move that stop loss down, manually move that stop loss down. And you might get to a point where it's like, hey, this is essentially a risk off trade here. I'm well into the profit on my stop loss. If it comes back and tags me out, that's fine. If not, let's just ride it. You do have a little bit of support here sitting at 20,810, which is your 50-day moving average, 810, 808. If you do start to close below that on this hour candle and you get a confirmation, you could be looking to test lower prices here down towards 750, 760, which is low of day. New hour candle will start to print here in about 22 seconds. Previous hour low is 822. Support right now sits at 816 and 805. Awfully close to testing previous hour low here. Again, just remember we do have support sitting at 808 and 816. I'm going to do one better here. I'm going to wait for a sweep. I'm going to wait for a sweep of previous hour lows. And then I'm going to take a confirmation of those new lows. So there's the sweep. Here's the sweep. Remember what that support is sitting at right now. And now the Bollinger Band has moved down to 807. So 805 and 807. That was the initial sweep of previous hour lows. I'd like to see some type of consolidation, maybe even a little bit of a bounce, and then a confirmation through 868. What is this? 816 and a half. $816.75.
Booking.com has stays for absolutely anyone.
A great offer.
Sell?
Here's a little bit of a bounce that we want to see here. Second entry would be below 816.75. Support is at 805. You might get 5 to 10 points there, and if it really wants to wash this 50 SMA, I would be selling on the breakthrough of that 50 SMA below 805s. That's when things can start to speed up. So far right now, I want to see 816.75 get confirmed. There's the break of 8/16s. And see if it wants to hold that a little bit. You can see a little bit of a bounce there off the tag of that 50 SMA. Coming down into that 50 SMA once more. Expect a little bit of buying pressure off that 50 SMA. And 7, 8, 11 points, 12 points. We just got tagged. I am all done for the day, guys. I'm all done for the day. That last trade was on 2 mini contracts, a $500 winning trade. Entry price was a little late because it actually filled me. It filled me a little late, I guess, on that. But I got in at 20,812.50 and got out at 20,701. So just over 10 points there on that move. I am all done for the day. That was a trade that I was looking for. I was looking for a confirmation through previous hour lows. I waited for that previous hour lows to get broken, put in that new low, and then for that new low to get confirmed. That was the move. That is it for me. I am done trading on the day. Best of luck, guys, for the rest of the day. If you are going to continue to trade, remember just to protect yourselves. I will be back. For those of you guys in the room, I'll be around the room if you have any questions. But other than that, I am all done trading on the day. Good luck, guys. Make sure you guys hit the like button on the way out of here. Would really appreciate it. See you guys all next time.